Good afternoon, everyone, and welcome to Stock Market Today. It's Alissa Coram and Ed Carson with a breakdown of the action in today's session, Monday, August 5th, where we saw a global sell-off continue after a poor finish to the week last week, but really an acceleration of the worsening of conditions, Ed. Even though we tried to get maybe a little bit of a bounce off of lows, stocks trying to catch a bid, but it's looking pretty ugly out there. What do you have for us?
Yeah, looking pretty ugly. Want to take a look at NextEra Energy, Howmet Aerospace, and PulteGroup.
Okay, we will take a look at those three stocks. And first, let's take a look at the major indexes. The NASDAQ today down 3.4%, while the S&P 500 down 3% on the day. You're going to hear a lot of talking heads talk about the Dow down 1,000 points. That was 2.6% because we love putting things in percentage terms here, Ed. And the Russell 2000 also with a rough day down 3.5%. But as we talked about last week, one would expect after news worth cheering, one might guess on Wednesday with Powell opening the door to September rate cuts, that you would see not the reaction that we got Thursday and Friday, but it was really the economic data that we got, Ed, with recession fears now coming into focus that are really driving the tape right now.
Yeah, and beyond that, there was more things. I mean, one reason probably why there was things is that there was the Bank of Japan raised rates last week, and it didn't necessarily get it, but there's this yen carry trade that's unwinding. So that's having things. The Nikkei fell 12.4% today. There's the NVIDIA news about reportedly an AI chip delay. There's some, there's a whole lot of headwinds, and clearly, but you don't necessarily need to know all that. I mean, things are breaking down. They showed real weakness on Thursday. That was an expectations breaker. Friday, really weak. Yeah, we bounced off the lows today a little bit, and the Russell and the NASDAQ came off their 200-day lines. But the trend, I mean, that's a pretty vicious sell-off. We're already in a correction, a lot of losses out there. Markets are trying to figure out what the heck's going on. This is actually looks sort of calm. The Treasury yield is sort of weird. They're going all over the place. There's these huge drops. Basically closed flat. I mean, it's like, oh, a ho-hum day. There's a whole lot going on. It's just best to be staying on the sidelines of this situation. There's not a whole lot of safety. There's some things that are holding up, and we'll look at some stocks that did relatively well today, but it's just not that kind of. It's just time to sit to the side and wait till things get show some real signs that the market's in good shape.
Totally agree. And while one might argue that we came well off of intraday lows, we'll show the intraday of the NASDAQ here. So some buyers coming into the morning hours here, Ed, but then we sort of jostled back and forth for the rest of the day. So it's not like we had an upside reversal here. At least we didn't just continue to fall apart and close at the lows at the very end of the day. So perhaps this could be a floor here. Still big losses for the day, but it makes today's lows somewhat important when you do have some sort of semblance potentially of stabilization. We want to see if we can hold these levels.
Yeah, and it could be that this is the bottom. And there was other things like the fear gauges were way up, all sorts of things were there. We found support. On the other hand, you look intraday, and that's just crazy. That actually got to the highest level since COVID.
Yeah.
I mean, that was like the world's coming to an end. I mean, really, we make jokes about it, but boy, we didn't know at the time. I mean, that was huge. Lots of things going on, obviously. But, the day before it wasn't as dramatic. But if you go back to intraday on the NASDAQ, a couple of days ago before, well, we came off lows near the end. Hey, maybe it's not so bad. The next day sold off. But then we did stabilize. So you could always, that's what we'd look at, at IBD. We look for follow through days. It's like, it's not try to guess that bottom, but try to go a few days in, just a few days. If you're going to get a rally that's going to last several weeks, several months, several years, you can afford to wait a few days to see if you get momentum. And, maybe arguably there's a day one here, depending on how you measure it. But, we need to see a lot more than this. And right now we just saw another big drop is ultimately what we saw.
Right. We're going to be keeping a close eye on the overall market conditions throughout the week. We always keep a close eye, which is why I think we're able to be so nimble when you get a day like Wednesday that's potentially positive, followed by an expectation breaker on Thursday to really start unwinding perhaps some positions and that were a little bit more meaningful for traders. So a lot can change in just a couple of days, and a lot could change in the next couple of days from here, but that's never guaranteed, which is why staying on top of these things is so important. So that way you're not a deer in the headlights, you're taking action. And then, from the sidelines, as you said, we can have a different mindset once things do start getting on the right footing. I do just also want to point out that where we came down to intraday on the NASDAQ, right at the 200-day line, that was around the level that we saw in that 3 waves down pullback from August to October of last year. So a long-term support level in the past, we'll have to see if that will hold now. But as you said, only time will tell. Anything else that we should cover on the index level, Ed?
I think we've covered that. Yeah.
Extensively. We live for these days. We live for these market days, Ed. I know the audience appreciates your guidance. Okay. In terms of ETFs, anything of note that we should highlight in your view?
Maybe take a look at XHB, take a look at maybe GLD, just some things like that. The home builders found support. There are some things that found support. And I mean, I don't know what you would do with this. The thing is, it's like I think what people should be doing is looking for stocks, looking for sectors that are showing relative strength. They're holding key levels. It doesn't mean that they'll continue to hold. There may be that's often in a bad market. You'll see those things they're holding, then they break. So, obviously this has had some bad days too. It's not like if you bought this on Wednesday, you'd be happy with XHB. But be looking for things like this. So a lot of stocks like this, but a lot could happen in the next few days.
Yes. Okay. We'll keep an eye on those relative strength lines, those moving averages, like the 50-day line for a lot of stocks. We want to see which stocks are going to be above that key level that have been able to withstand some of the damage that we're seeing that's so widespread right now. Okay. And then so that's XHB. You also mentioned gold, which looked like it was going to have another go at highs, Ed, but not quite yet, hitting some resistance last week and coming off a little bit today. Just not, we're seeing that relative strength, but it's not really going anywhere.
Well, that's the thing. In a bad market, relative strength can still mean absolute losers, and it's still down. And it just shows you there's just people are not feeling comfortable about this. I'll be honest. Whenever we start saying, "Hey, I want to see how Asian markets are trading or the dollar yen trading," that's usually not a good sign for U.S. markets when investors are starting to think about that. There's just a lot going on, and maybe it'll all smooth out in a few days. Maybe it'll be a few weeks or months. But yeah, I mean, this isn't terrible, but it's not going up either.
Yeah, and another interesting development today was with Bitcoin absolutely getting demolished. Here's a look at the IBIT ETF, down about 14% on the day. It did manage to come off lows, but this move undercuts the entire base that we've seen form since this spring. So the lowest levels for Bitcoin in a number of months here, as investors are looking for a place to hide, but it's not Bitcoin.
It's not. You got to think of Bitcoin as almost like a triple levered NASDAQ ETF. I mean, it is risk on. It is very much a risk on asset. And when people are risk off, it's going to suffer. And that's just something that you need to know when you're thinking about buying, selling, these holdings.
Okay, and then we'll quickly check in on the chips, and then we'll get to those 3 stocks. So here's a look at SMH, the chip sector ETF. It too coming down to its 200-day line for the first time since October, November of last year. But that doesn't mean that we're going to be buying here. As you mentioned, Ed, there are some buyers stepping in at these levels, but it'd be great for the dip buyers to form that floor, and then let's see if we can get a reestablishment of a change in trend. But it's still going to take a while for the chips to look good again. There's just been a lot of damage here.
Yeah, the chip stock looked damaged. I mean, that's really damaged. I mean, maybe a week and a half, 2 weeks ago. Now they all seem like they're going to need a lot of time You're right.
And that's other news that came out over the weekend. We had a couple of different mega cap tech stocks in the spotlight, but for not great reasons. With NVIDIA, news of a 3+ month delay in its new next generation chips. We also had Apple, news of Warren Buffett coming out a couple of days ago, news that he is shedding his position. And then you have Google, the antitrust news coming out today. So a lot of the tech stocks that had been leading the market really coming under a lot of pressure lately, Ed.
Yeah, I feel a little bit like multitasking. At some point, you just get stressed. Even if you're able to handle it, it's like I feel like the market's just hearing too many different things. It's like, oh, the economy is this. Okay, all right. Oh, this thing. Okay, it's like okay, and it just everything's getting a little frazzled. I think that adds to that fear and just like the heck with it. I'm getting out. I'm getting out. Go to safety. Nothing's really working right now, and there's a lot of negative news lately.
All right. Well, I know you and Jed will keep us apprised on the economic front, and then you wear a lot of hats. So we'll definitely be coming to you for other breaking news as well and the impact that it could have on where the market goes from here, Ed. Okay, let's take a look at some stocks of note. Here is NEE Utilities. Of course, that's one of the defensive areas that you often see showing relative strength in uncertain or weak markets. But as growth investors, this is not really an area that we typically play, but it's good to keep stocks on the radar just to see, okay, what is showing that relative strength? And usually for me, Ed, when it's utilities, that tells me a lot about what I need to know about the current conditions. And instead of chasing strength to, squeeze out a few points of outperformance, I think that's yet another reason to just, wait on the sidelines and find the leaders that have more of those qualities that we typically like to see in bull markets get back on their feet.
Yeah, I mean, I totally get that. And this is utilities are just a classic defensive play. I will say that there are definitely been some utilities that have gone on good runs because they're seeing as an AI adjacent play, energy
Yes.
production. And this one, its relative strength has picked up lately because of, the market, but it had a decent run before, I mean, not like a few of the others, but they're talking about this was our stock of the day today. It's not actionable today. We weren't really trying to encourage people to be making too many buys. This little base kind of thing could almost be seen as a handle to a huge base. So it's not moving like some of the others, but it's definitely with someone. I know that Scott St. Clair was talking about this on IBD Live. And so it's just something that's setting up. So there are some aspects that are a little growthy to it, a little bit of something, a little pep. And it does provide, it's decent growth. It's not a zero growth company. It's not, like that. And it does have a dividend. So it can, it's not something you probably want to load up your portfolio in a bull market, but it could do well even in a bull market. But yeah, I mean, when utilities are the only things that are working, that's a pretty good sign right there.
Yeah, but you're right. I mean, there are some traders out there who want to try other trades versus just staying in cash. A lot of times we say cash is the best defense or the best hedge. But there are still some who are active or who have different goals. So good to point out what is setting up in the market for not only potential trade ideas, but just good information, good feedback. What is working in this market right now? Okay, let's take a look at HWM. This is Howmet Aerospace. Aerospace and defense stocks also in focus lately because guess what? There are other headlines out there over the last week brewing with renewed Mideast tensions. And not only that, you do have a very positive reaction to last week's earnings report from Howmet.
Yeah, and this one is civilian. It's defense. It does a lot of supplier to Boeing. It's involved with the F-35, so it does a lot of interesting things. Yeah, so the stock has come down, but you see the RS line didn't come down that much at all. The stock gave up a lot of those gains, but it shows you the market right here. It did find support right about around the buy point. The 21-day line is going to catch up to it pretty soon. This is tough. I mean, this just doesn't seem like the environment to be buying anything. but you want to be looking to see these things holding up. Maybe you'd feel more comfortable if it moves sideways a little bit and then the market gains some momentum. Again, you can do anything you want, you can try anything, but it's like the market conditions aren't great. But this is definitely one been doing well. You look at those fundamentals, just solid in the teens on the revenues, strong earnings growth there. The aerospace group is doing well overall, and definitely one to be looking at closely here.
Yeah, we'll keep it on the watch list. Okay, let's take a look at PHM in the home builder space, seeing some support at the 10-week line after a breakout attempt in recent weeks on the heels of earnings. We'll take a closer look at the daily chart here. Compelling action in terms of the closing range here, Ed, at 71% today. So well in the upper half of the day's trading range. That's another tip off for what's showing that relative strength, in addition to the relative strength line and just seeing stocks that are holding at or above those shorter term moving averages. How did they close on a day versus other stocks during a market correction? That can be one clue for folks.
Yeah, and there just showed that strength. Again, it's had a few days. The volume hasn't been that bad. I mean, it was above average today, but not as high as maybe a lot of those blue spikes that we got on that big run up. It held the buy point. It's right at the 21-day line. It basically bounced off the 10-week line. Again, it's just so hard because this is a situation where you might say, "Hey, I could buy this," but like the conditions. When you're talking about the investing pillars that we try to talk about, yeah, there's the stuff with the stock, but the market is so huge to that. And it just makes you wary about anything. But this, again, this was a leading sector. It's not breaking down. And honestly, that's the kind of stuff you're looking for right now.
Absolutely. And predictions don't go very far here, but scenario analysis does. So, Ed, what would you say optimistically is the best case scenario over the next couple of weeks in terms of the next potential market catalyst?
One of it just things calming down with the yen trade. Some of these things, just no news is good news, perhaps, like overseas and some other things. It'd be great if NVIDIA came out and said that stuff is lies, but I think they probably would have come out with that on the dice. But I think just there's hope that maybe some of the weakness we saw in the economic data was weather related. It may or may have been, maybe not. But the services sector index that came out today was pretty good. Maybe the jobless claims will come back down, which would suggest that the Texas storm that hit was actually a big factor in the jobs report. So those would be something like that you'd be seeing, just looking for signs of strength that maybe July was temporary factor and not so bad. And we actually, the soft landing is there, but it's hard to know. I think it's just, seeing some stabilization, not necessarily something dramatic and powerful, just saying, hey, things aren't so bad.
All right. Well, thank you as always for your perspective, Ed. And thanks to everyone for tuning in. Make sure you tune in at 5 p.m. Eastern live on our YouTube channel, where I will be joined by veteran hedge fund manager Jim Ropel. We have our monthly market report video where we're going to be getting Jim's thoughts on the market action for July and how the first couple of days of August have unfolded and what his plan is from here on out until the next Fed meeting in mid-September. We will get all of his thoughts. So make sure you join us on our YouTube channel, investors.com/videos. We'll also have that recording once we have the show wrapped, just like this one. We put all our videos at investors.com/videos. So that is it for today, everyone. Thank you for tuning in, and we'll see you in the morning on IBD Live, investors.com/IBD Live. See you then.